All right, we are live. Thank you everyone for joining the Zcash community discussion on the future of the Founders Award, the future of the Dev Fund, depending on how you would like to call it. There's many different explanations here. We have a good number of people on today to help explain their perspective in this discussion, and we would like to hear your perspective as well. So I will be watching the YouTube chat. Again, this is a live discussion, so you can ask us questions. We're happy to answer them. But we, of course, wanted to start with quick introductions on who the people are on the call, what sort of entities that they either represent formally in this discussion or work for and don't necessarily fully represent in this discussion, just to give a nice overview of who we are. And then we can go on to discussing what the specific Zcash proposals are for the future of the Founders Award, the future of the Developer Fund, or the Block Award, under many names. And we can have a nice, the intent is to have a nice high-level conversation to help set the stage for future discussions. So starting with my introductions, my name is Justin Ehrenhofer. I organize the Monero Community Work Group, which is why it is on this YouTube channel, because it's the one that I had available to me. And I work for a cryptocurrency OTC trading desk called DB Chain, which provides Monero and Zcash services. So if you are interested, that's, I guess, my little shout out. But I do not work for the Electric Coin Company. I do not work for the Zcash Foundation, and I do not receive a direct portion of the Block Award. All right, how about we continue? Daria, can you introduce yourself, please?
Yes, I'm Dara Hopwood. It's Dara, not Daria.
My apologies.
I work for ECC. I use Z here pronouns. Anything I say here is my personal opinion and not speaking for ECC unless I say otherwise, and I'm not likely to say otherwise.
Thank you. John, can you introduce yourself, please?
Yeah,
Well,
He just left. He clicked the wrong button, presumably. All right, Andrew, how about you?
Sure. Hey, everyone. I'm Andrew Miller. I do cryptocurrency research at the University of Illinois, and I am a board member of the Zcash Foundation. And I'm the advocate for one of the Dev Fund proposals that's minor discretion. Right.
Thank you, Andrew. How about you, Aaron?
Hi, I'm a professor of computer science at Tel Aviv University and a research scientist at Columbia University. I'm a founding scientist of the Zcash company. So disclosure, I have equity in the company, and I'm a technical advisor at the Zcash Foundation.
Thank you. Josh?
Hi, everyone. I'm Josh Cincinnati. I'm the executive director of the Zcash Foundation. I'm hesitant to claim that anything I say today will be the official Zcash Foundation position because we have a very lengthy post coming up in a few days that will describe our current position, and we're still working on getting board consensus for that. So in that sense, I think this is more me representing myself personally, but if I happen to say otherwise, I will explicitly say so, as Dara suggested.
All right, how about ML?
Hello, can everyone hear me?
We can.
Yeah.
Excellent. My name is Mario. On this call, as everyone else, I represent myself, not the organization that I work for, but I do work as a governance researcher for Placeholder, which is a venture firm based in New York City that holds a position in Zcash, and we have a proposal on the forum on the Dev Fund. And
excellent, thank you. We'll certainly be asking for
calling
your opinion later on with that.
Okay, hopefully my connection can handle that. I'm in transit right now, but fingers crossed.
Excellent. STR4D. So first of all, can you pronounce how you prefer to be called, and then introduce yourself, please? Because I've seen your name several times, and I've never heard you speak it out loud.
Hi, I'm Strad.
Thank you.
Yeah, Strad or Jack, I answer to both. I'm a cryptographic engineer at the Electric Coin Company. I've been there since before launch. As with Dara and Josh, anything that I say can and will be used against me. So yes, I'm here to speak for myself, not for my employer. And yeah, I am not an advocate. I'm not a whatever the position is on any of the proposed proposals. And I think John came back, so we could pop him back in.
Yeah, I'm back here.
All right, John, want to give it another shot?
Yeah, hopefully I don't get disconnected this time. But basically, what you guys all said, I'm here just for myself, speaking on my behalf. I've been interested in Zcash somewhat since before it even launched. I work for the block as a researcher, and I was just excited and to hear all your guys' viewpoints on all this.
Thank you, John. What about you, Ian?
No, we
You
don't
are
hear you.
muted still.
There.
I love
Is
how
that better?
every single video call is like this.
Does that work now?
Yeah, we can hear
Yes,
you now.
we can hear
Okay.
you, and you are right. Every
Okay.
call is like
So, Ian Myers, co-founder of Zcash. The thing was my PhD thesis. I am also on the board of the foundation. None of the things I say here reflect the opinions of either of those places. In fact, they may radically disagree with them. Or C.
Yep, thanks, Ian, for coming on. All right, Isthmus. And you're muted also.
The default when you join is to be muted, I believe. So,
Okay, can you hear me now?
Yes.
Awesome. I'm Mitchell, or Isthmus. I'm a privacy coin researcher. Some days that's Monero, some days Zcash, some days Loki. Never a maximalist. I've been kind of like closely around crowdfunding types of situations. I'm in Silicon Valley, so I'm very familiar with a lot of startup funding situations. Lots of challenges any way you go. So I thought I'd listen here and see if there's any way I can be helpful. Nice to meet you all. Send me in person.
Thanks for joining us. I know from the Monero community, you're usually quite busy, so it's good that you're able to keep hopping around and helping us all as we need different sets of eyes. I know you've been doing recent work too, which is outside the scope of this call, but has been nevertheless helpful to the Zcash community. So there's this one person who does not have video called Fellow Jitzer. Feel free to introduce yourself, speak up if you like. Otherwise, we can have you hop on later. I know there are a few other people that had hoped to make it, and so hopefully they can introduce themselves as they come in.
Justin, can I introduce myself?
Oh, sorry, Sonia. Yes, you may introduce yourself.
Hi, everyone. You may know me from the forum. I'm at Sonia on there. I'm the Zcash community, I'm the Zcash Foundation's community and other things like that person. I am here in that capacity. If I say something that's just my personal opinion, I'll call it out. Otherwise, I hope that I can fill in context or provide links or documents in the YouTube chat, answer questions, that kind of thing. Yeah, and I'm really excited to find out what everyone thinks about this.
So just to be clear, you're the only one who is default official.
Apparently, yeah.
Your camera is off, Sonia, by the way.
Oh, sorry. Is it on now? Oh, wait, I turned it off. I'm sorry. Hi. All right, that's me.
Hi.
That's all I have to say.
Thank you. Yeah, a lot of these people are using Jitsi for the first time, which is a nice open source tool, but it has its own quirks. So we're all going to make our ways through them, and hopefully it'll be for the best. All right, so now that we went through those quick introductions, I want to give a really brief overview of what the situation is with Zcash generally. And of course, anyone else that's in chat, please feel free to interrupt me. There's actually a feature where you can raise your hand. That'll signal to me that you want to interrupt if you want to be more polite, if you choose. But there's a quick overview. The Zcash block reward currently has an allocation where some of it goes to specific founders, some of it goes to the Electric Coin Company, and some of it goes to the Zcash Foundation, among a bunch of other different entities. Now, around November 2020, this allocation stops. So at a certain point in time, instead of about 80% of the funds going to miners and 20% being allocated among several different groups, instead 100% currently, if the status quo remains, will go to the miners and 0% will go to any of these other entities. There are great write-ups by Zuko, Zcash Foundation, the Electric Coin Company, and many other members of the Zcash ecosystem that better document in a lot more detail how all these funds go and sort of the original importance of these funds over time. Zuko recently made a post in particular that hopefully Sonia can link in the chat, otherwise I will in a few minutes after I get a quick break here. But it documents how many of the initial founders funded the initial Zcash development, and so they're receiving a current payout or the reward as a result to help cover this. So that gives a little bit of context. To add to this, though, the Electric Coin Company, Zcash Foundation, and other stakeholders have expressed that they would prefer for a better source of future funding, where there is a specific allocation in the block award, perhaps, that would be donated to or would be given to either the ECC or the Zcash Foundation or some other entity that the community agrees on. So that's why we're having this general discussion today, is to help sort through these different opinions that different people have and to piece a lot of these together. So hopefully that was correct up to this point. No one has huge disagreements with that yet. But the whole point of this call today is to help organize these thoughts a little bit better, give a little bit better perspective to many of these, and to proceed on from there. Any big questions there about what I've done so far? Anyone have any objections to what I've said so far? Okay, good. Haven't failed yet. Okay, so perfect. So without further ado, I'm going to give it to Sonia really quick, just to give a quick overview about what the Zcash Foundation is, because she's representing it here in a formal capacity. And then later we can also give a quick introduction about what the Electric Coin Company is, previously was called the Zcash Company, just to give a little bit better perspective about what these entities are and then what they do for the Zcash ecosystem to help round that out to perhaps a new viewer.
Should I start now?
Yes, please.
So the Zcash Foundation website, zfnd.org, is a nonprofit that exists to create privacy infrastructure for the public good. And we have a focus on Zcash. We're funded currently through an endowment that was donated by recipients of the Founders Award. So we do get the Founders Award, or part of it anyway, by a somewhat circuitous route. We have a small but existent technical team that's working on Zebra, our independent consensus-compatible alternative to Zcash-D. And we have numerous other projects. We have a grants program. We're trying to grow into an ecosystem that involves a lot of ways for people to participate, even if they don't have like a full-time job at a tech startup. So that's a lot of what we're focusing on with this governance discussion, our grants program, and some of the other stuff we do. Maybe Josh would want to tag on to that, like if there's something important that he thinks that I should emphasize that I didn't say.
No, that was great, Sonia. I mean, I think the biggest or one of the more interesting aspects of well, sorry, just to contradict myself a little bit, the only thing that I would add is that one of the big motivators for having the Zcash Foundation exist, in my view, and I think when the folks came together to put the foundation together, was to create the seeds for a more resilient ecosystem by having a separate organization, completely dissimilar from, or completely distinct from the Electric Coin Company, that's like primarily focused on Zcash. And that I think we've been growing more into that role, and I suspect we'll continue to grow into that role in the future. So.
All right, cool. Take it away, Justin.
Yeah, so who would like to give context for the Electric Coin Company? I know no one is representing them on an official capacity here, but would anyone like to give a stab of just a quick overview about what the Electric Coin Company does for the Zcash ecosystem? We have some nose goes over here. Strad, are you sure? Do you want to take that, Strad?
Oh, sure. Okay. So, yep, the Electric Coin Company, formerly known as the Zcash Company, officially the Zero Coin Electric Coin Company, but yeah. So it's the company that was formed back in, I think, I assume 2015, 2014, sometime back then, back in the depths of time, to take the Zero Cash protocol as was envisaged in academia and convert it into a production network. Since we deployed the original system end of October 2016, we have been the primary developers of the main reference Zcash implementation. And we have also been doing our research and development into basically entirely improvements on Zcash. The most obvious one of those would be the sapling upgrade that was deployed in October last year, which was basically us spending 2 years doing the exact same thing, but 20 times faster. So it was a bit of a slog, but we got there. And then more recently, we've been doing a bunch of work on adoption, building backend libraries, and generally just trying to get this thing into as many people's hands as possible.
One thing that Strad didn't mention is regulatory engagement, talking to regulators and potential regulators, and trying to explain to them why Zcash is not this scary thing that's only used by terrorists. That's my summary, not official policy.
And also not speaking for ECC since I don't work there, but as someone who has observed it, the regulatory stuff has paid off in Coinbase listing, Gemini, BitGo custody tools, that kind of thing. Like this institutional adoption really needed regulatory help to happen.
And we also provide some technical support.
Oh yeah, I'm sure.
Large customers and individual users. Well, as such.
Yeah, if anyone on the video stream wants to get a better view of what we've actually been doing than us people here, there was a recent blog post on the ECC website, electriccoin.co/blog/animating Zcash, and there's a timeline there you can look at if you want more details.
There's also the statement on sustainability.
I'd like to add one thing. A lot of the software development process is visible and obvious, but a huge amount of work does go into like the exchange regulatory stuff and exchange listings and a bunch of relation stuff that is by its very nature done completely behind the scenes. And that's the bit that people tend to forget about, actually, including myself frequently. So just keep that in mind.
Yeah, huge shout out to my colleagues who put an immense amount of work into that.
Excellent, thank you. So before I proceed into jumping into a financial model to help show the nuts and bolts of how all these numbers look like, which I know is a major point of the call that will help set some context for ultimately having the community choose what numbers are really appropriate for further funding and so forth. Is there any additional context you would like to provide before we jump into that point? And I shared the Animating Zcash link in the YouTube chat, and we will be talking about the transparency report from the ECC and the company statement on sustainability too, quite in length later in this call too. So be prepared for that. Okay, all good so far. So without further ado, I'm going to start sharing my screen, and we're going to jump into the model that I presented, and we're just going to go from there. So bear with me. There's a decent amount of stuff to get through because there's a lot of nuance with spending real costs in US dollars and trying to project the price of ZEC in a reasonable way and looking at burn rates as the amount of ZEC that's being distributed is allocated. So it is a really complicated model, and I've tried to make it as simple as possible, but there will be plenty of time to go through any of the specifics later, and I will share a link for everyone to go through the worksheet at their own pleasure with their own numbers for whatever they choose in the future. So I'm just going to say, bear with me. but we'll get through it. Okay, so here we go. Sharing screen, and everyone should see it now. All right. So I started putting together some numbers for what.
Just to interrupt for a second, can you increase the font size a little bit?
Absolutely. So there's a lot of stuff. I'm going to be zooming in and out.
Yeah, zoom in.
There we are. That zoom was fine. Perfect.
There's a lot of stuff, but again, we'll make it through this. Okay, so I have a few. Everything in yellow is basically an assumption, so keep that pretty clear. This whole thing is an estimate, so I want to really clearly indicate that everything about here is estimated. There's going to be some differences, but largely the intent is for it to be, correct here. So things like the initial block reward for the first 10,000 blocks, this came up with an accelerated emittance schedule that I don't have the full formula for, but this is approximately what it looks like. And then some of these numbers are a little different too. For example, I currently have the proportion going to an entity. In this case, it's the ECC at 8% of the block reward. Of course, for the past, it was a little bit smaller than this, but I'm not trying to project past financial statements. I'm just trying to project future financial statements. So for future issuance, for example, it's 8% right now, but the amount that went to the entity for this total number of blocks is not 840,000 ZAC, for example. It was a smaller number because it was renegotiated up to this 8% rate. So again, a ton of weird nuances like that, but the entire point is trying to project how the ECC is going to the future, and then we can do this again for the Zcash Foundation, any other entity also, in preparing what these numbers look like. And I'm going to continue expanding these a bit, but Strad indicated that he would like to give a quick comment.
Just saying that you can ignore those first 10,000 blocks. So I remember very carefully calculating the emissions curve so that the effect of the slow start did not impact on the first halving. So it should be modulo any rewards that were not taken up by miners. The cap on the first year is 10.5 million.
Good to know.
So can you hear me? Okay.
We can go ahead.
So to clarify, ZAC here does not include. Wait, which entity are we talking about in columns G and
In
H?
this case, I'm referring to the entity as the ECC. However,
right. Okay, so that would not include, for example, founders, just the company itself.
Correct. This is
and would not
excluding
include
founders.
investors. Okay.
Yes, the point of this is not to indicate. So my entire motivation by making this model is not to indicate how much funds that the founders received from past block reward issuance. The motivation is to project what future issuance certain entities would receive from the block reward going forward after 2020, November 2020, and then to indicate what they could do with those funds, and we can have a conversation then about how they can be used. So it's you could project backwards with some changes, but this is all focused on eventually going forward. So I took a few small liberties there, but the intent is to talk about what to do going forward. So that's surrounding context. So you can see a few things here, like I updated the ZEC price a few seconds ago at $64.73. Who knows what the future price will be, because ZEC annual volatility is about 0.77, which means that for a year, it's typical for it to almost move its entire value. And ZEC is actually one of the least volatile assets of cryptocurrencies, of course, taking stable coins out of the picture, because Bitcoin is about 0.6, Monero is 0.7, and other things are sometimes greater than 1, where you would expect the value to move significantly. So I'm not using this number to project what I believe is the future price of ZEC. The only reason I'm using this number in some of these projections is to help share that there is like it would take an increase of about 2 standard deviations or whatever in order to account for certain funding models. That's the only point of looking at this volatility number. Furthermore, I don't know what the number of ZEC and the number of US dollars and so forth that the ECC has on hand. So these are just completely estimated to get about $3.5 million of USD value. And in reality, if the ECC or whatever entity we're projecting with would be holding a lot of ZEC, their exposure to the price swing of ZEC is going to be greater than what I've projected in this model. So this is sort of assuming that at the point of time in which they have holdings, they're keeping most of their funds in USD, which again isn't actually the case with what they've shared, but it's to keep the volatility down. It's a lower estimate for ZEC volatility. So that's a lot of stuff again, but the whole point is that we can manipulate these numbers here in order to change what proportion goes to the entity going forward in the future. And we can show what those numbers would look like at various burn rates, at various Zcash prices. That's the entire point of putting a model together generally. So what did I do? I looked at standard deviations for different price probabilities. So we start off, you know, around the middle here with the current price of 64.73, and then if it goes up or down in the sort of bimodal distribution, we can get to either extreme lows or extreme highs. But the entire point is just showing what the probabilities look like generally of prices being in a certain range given past volatility. And past volatility does not guarantee future performance in any way. So again, it's not a good model, but it's the best that I really have, and it's only slightly better than literally rolling a die. The only point I really want to make as a result of this is to say projecting out even like a month in advance is difficult with Zcash's volatility, and projecting more and more months means that you get less and less accurate over time. This shouldn't be really news to anybody, but it just makes it really hard in these community discussions to accurately give a vision to say, oh, well, of course we can guarantee with this sort of block reward that an entity will receive this amount of USD funds. It's just not that simple. So I wanted to simply point out that, you know, in about a year's time, for example, the probability of price being the same is quite low. It's about 8 to 9%, assuming that it's a normal distribution, which again is a bad assumption. I want to be really clear, it's a bad assumption, but it's the best I have. And being around 87, 47, etc., there's a lower rate of about 2%. These are towards the edge of prices that fit within a normal distribution. All right, Ian indicated he would like to speak. What would you like to say, Ian?
Oh, I just wanted to say that the point about volatility causes problems that may be somewhat not unique to Zcash, but for projects with other sort of funding and development models, less of a problem, which is that both the foundation and the company, and presumably any other group that worked on it, needs, you know, substantial cryptographic talent, which basically means you're sort of actually employing people long term, and it becomes a major point of stress if you cut the margins too thin on whatever your supply of coins is, because you don't know whether you can guarantee people they'll have a job by Christmas, right? And so this is a problem that in other communities where people are sort of freelance, it's I guess it still exists, but it's not as prominent. So just a point to keep in mind.
Yeah, absolutely. The point of this is absolutely not to have a price projection conversation. It's merely to indicate that projecting the amount of funds that an entity will receive by giving them a proportion of ZEC block rewards is subject to limitations. That's the big takeaway that I want to get.
That's exactly the right takeaway. And you know, if you looked at it, you could see scenarios where you end up with too much money, which is frankly a thing that we'd have to deal with. But you can also see scenarios where we end up with too little. So you have to that's what pushes it to to be careful about it.
It's also worth pointing out that the volatility interacts in a really terrible way with tax. and it's extremely stressful. And you need some margin to be able to deal with tax issues.
Absolutely. Thank you for that important point. So I'm not going to spend too much time talking about price because, first of all, I find it really boring. We're talking about the technology and making ZEC better. Price is important, but I get bored with it. So the intent of this is to simply help us project what it helps us project a safety margin for ultimately what we're looking at, which are these runways. So I took these price probabilities, I plugged them into certain issuances with the block rewards. So currently at about 8%, the Electric Coin Company, this is quite small, so I apologize, but the Electric Coin Company is getting about $1.1 million a month, again, assuming the price is the same. And this is subject to future variability where these might change significantly, but that just gives you a rough number to work with. And then we can use these numbers to help generate ultimately what I find the most interesting part here, which is the runway probability. So everything about price only comes into effect for these runway calculations, where we can look at what the current price is. You know, it starts really low. Let's say a tragic event happens and ZEC falls to $10, $11. And we can look at a really happy event where ZEC goes to like $590. And then we can look at the probabilities that those occur. We can look at what ultimately the company funds look like as a result, and what they're able to do with it at a set expenditure rate. And I can change this number to whatever number we prefer. But we can plot it. We can see what it looks like. We can see what the runway looks like. And it's something we can ultimately use. And I'm getting a ton of conversations from within the chat. So I'm going to take a quick breather to read this chat. So people talking about making coffee, live stream. Okay, we're good. So
is there a way to switch off that annoying noise that happens every time someone makes a comment on the chat? It's really, really distracting when people are talking.
So I don't know how to turn that off, but people that are watching the live stream will not hear it, only us.
Okay.
Yeah, so sorry about that.
I don't have any noise by default.
So I'm going to stop sharing my screen very briefly. We're going to come back to this runway screen in a bit, but I want to give people a chance to speak about what I've already talked about so far, where we can go through. I've just created a system where we can change what the emittance looks like to certain entities, and then we can ultimately plug that in to a sensitivity model where we can check with varying expenditures what the likelihood that these entities will continue to be able to operate, absent other funding. So I'm going to again open it up to quick discussion, and then we can hop right back to this because I'm sure that people probably want a break around now. Everyone needs a breather after that, I'm sure.
Yep, I need a breather.
So this is why it's so hard to have these community conversations, because we can talk about different numbers, we can talk about different ways that entities provide support, but ultimately at the end of the day, we're using variables that can change at any time. So
Justin, can you hear me now?
Yeah.
Yes, I can hear you now.
Sorry, I accidentally muted myself, but we're getting a lot of questions in the YouTube chat section, both about like what is the status quo of the founders reward, when does it actually end? Like, there's a lot of sort of the basic background that maybe it would be good to have a summary of. And we're also, the question is coming up again and again, like, why can't Zcash just do what Bitcoin or Monero does, where you have sort of a decentralized funding community that is not based on the protocol. That's something we've talked about extensively at the Zcash Foundation. I wonder if maybe Ian or Josh could weigh in on that, because I know they have thoughts on it. But it also might be good to just have a quick summary of like, what is the status quo? What are we discussing changing?
Absolutely.
Or the possibility of changing. I want to be clear, like there's no foregone conclusion here.
Yeah, thank you. So let's jump to that second question first. So if we can have Ian or sorry, who else did you mention? Ian or?
Ian or Josh Cincinnati, but also anyone, like, those are just people who I know have opinions on this and have some background, but anyone who could speak to that is great.
Okay, so let's start with that question first, and then afterwards I can show the table showing the issuance over certain blocks where I have the approximate dates tied to them, so people will be familiar with what the future issuance of ZEC looks similar to.
So I guess I'll jump in if that's okay. So I think that for that second question, it largely depends on when your cryptocurrency community started and launched, in my view, and ultimately, I think a lot of people, and myself included, like, find a lot that's very admirable about the way that the Bitcoin community like self-funds a lot of the work that goes on there. But so much of that, in my personal view, is the result of it being debuted at a very, very special time when no other cryptocurrency ever existed. And consequently, the people that are engaging in a lot of that self-funding effectively reach their own, personal runway and can work for free for life because of the just incredible accrual of value in Bitcoin over time. And when you start a cryptocurrency, something like 7 years after that, it's going to be very, very difficult to actually, I think, create that kind of self-sustaining model purely off of wealthy benefactors from earlier on in that cryptocurrency's issuance schedule. And I think a great example of this, to be honest, is Grin, which is a very, I think, promising community, and they are facing the same sort of funding issues when there was something like $100 million poured into special vehicles for mining, but not, like a sliver of that has gone to one of the core development groups behind Grin. So I think that's why this discussion is happening, and why, at least back in 2016, I found the concept of the founder's reward or something like it to be a novel solution to that kind of problem. But yeah.
Ian, do you have any other comments on that?
Yeah, it's the same thing that Josh said. There aren't really Zcash whales who would be able to fund that kind of development going forwards, at least as far as we know. It is. There are some projects that have what looks like community funding, but of course, it's also very easy to fake that. And so I'm actually kind of worried about various things in the space where it looks like they have a community thing, but I suspect there's a couple of, very deeply pocketed people in the background distributing money. And I don't think that can happen in Zcash. We don't have, the market gods are not that kind to us, and that's that's the reality of it.
Could I just jump in? And the technology behind Zcash, the cryptography especially, is really complicated and has needed to be. We've needed to push the state of the art to do it at all, and that's not the case for Bitcoin. Bitcoin basically uses digital signatures, which is let me count, 40-year-old technology. Grin and Monero, maybe to a certain extent, there's new cryptography there, but not much of it. Whereas Zcash is completely different, and it's different for necessary reasons. We're going for much stronger privacy properties, so that is a big difference between Zcash and the other protocols.
I don't want to make a large political discussion here. I just merely want to indicate that there are limitations to every sort of model. I suspect that in Monero's case, for example, It might be a combination of the exception to the rule and a combination of people not knowing who's donating. And so there's a ton of different factors that go on, and ultimately there is a case where people will struggle to get funding for a lot of different projects, and there's many ways to try and address it. And each have their own set of pros and cons. So we can talk about what's an ideal case. We can talk about what's a reasonable case. The point of this call today is to talk about those proposals, because many people have listed proposals for the future of funding allocations. Some people have indicated that they would like to opt-in proposals, or would like the miners to vote themselves on how they want to allocate funds. There's many different takes that people have on how to continue addressing the future of funding for specific projects. And so it is all one big conversation on how these things interact, but it is a very messy conversation. And usually when people are talking about one side of things, they're either looking at a very narrow focus, or I don't know, they're assuming certain results might apply in cases where they may not. I think in Bitcoin's case, for example, I think it's clear Bitcoin's case is different than most other cases where indeed there was a lot of initial developments that was well outside the spotlight, and the situation has changed to some extent. Andrew, you said you would like to speak also?
Yeah, I just really just wanted to say I'm looking forward next to talking about like the recap of basically before getting into the proposals, which are like how the funding occurs. It would be nice to talk about like what could we hope to get from development funding in the near future. So like what are some of the the way that I like to view this is that the Zcash community has the choice of basically deciding to add new funding, which would come basically at the expense. If we don't touch the inflation rate, then what it would come from is basically reducing the expected amount of reward to miners. And so the first thing I'd like to recap is like, what kinds of things would we expect to get in exchange for that?
Absolutely. Do we have any final comments on this before I jump into explaining, again, first and foremost, what the future issuance generally looks like on a high level for those who ask those questions in the chat? And then I can go through the 10 active proposals that people currently have on the Zcash forum. We can run some numbers to see what exactly the issuance would look like there. And then finally, we can, again, reopen it for this type of discussion on what people are generally leaning towards. Does that sound good for anyone? Everyone here? Okay, so let me share my screen again. Here we go again. And thank you, Sonia, for keeping track of the YouTube chat, because I'm quite distracted as I have everything else going on. So that's very appreciated. So to give a really high-level overview, Zcash follows a similar type issuance to Bitcoin, where every few blocks, every so often, it will have the total amount of the total amount of block rewards that come through. So let's say currently at the moment, 12.5 ZEC are issued each block per reward. Again, a proportion of that goes to different groups. But in the future, it will be cut in half, and then cut in half again and again and again and again and again, until eventually 2044, there will be no further ZEC emitted. These are approximate dates based off the block times. They will change because ultimately the blockchain is not set to a specific exact time. Instead, it's set to how people mine it according to an approximate schedule. So we're here, row 6, where 12.5 ZEC are rewarded each block. And this will continue until about November 2020, about November 13th, 2020. Then in 2024, we'll have another halving where it will drop from 6 to 3 and then to 1.5, so on and so forth. But this will give you a general high-level overview. Zcash launched in 2016, October 2016, and it's up to its peak emittance rate at the moment, but the inflation rate, new issuance rate of coins will decrease in 2020, again in 2024. And critically, in this very first issuance in 2020, if the status quo remains, then 100% of the funds after November 2020 will go to the miners rather than 20% currently going towards a variety of groups, including these Electric Coin Company founders and Zcash Foundation. So there are some discussions to change status quo after November 2020, such that different entities besides miners will get a proportion of these funds going forward. And there are many different proposals with how to impact this. So first, let's walk through sort of the unspoken proposal, which is the status quo. Actually, I say unspoken, but actually the very first active proposal by MIST FPGA on the Zcash community forum is the status quo. Before I do that, Dara would like to give a quick word.
Yeah, so just for some historical context, when we were deciding on the issuance, there was quite a bit of discussion of alternative issuance to Bitcoin. And one of the reasons we eventually went with exactly the same issuance is just technical conservatism, because that wasn't what we were innovating on. We were innovating on at a higher level of crypto, and we knew that Bitcoin kind of worked, but we weren't asserting that Bitcoin's issuance model was ideal. Now, it is not proposed to change the total issuance, but it shouldn't be assumed that we were trying to predict the future too much when we decided that the founder's reward would stop after 4 years. That's all I want to say.
Thank you. So I'm getting everything else set up here. Let's go through the very first proposal that MIST FPGA is advocating for, and we'll go through the other 9 after this. And this first proposal, which I just linked, is to keep the status quo, which is the simplest proposal of them all, which merely indicates that 20% of the block reward that is currently going to founders, ECC, Zcash Foundation, and others will cease, as was originally the plan, or as is currently the plan, and all the emittance will go to the miners. And if these entities would like to continue receiving funds, they would do so through another method, some indirect method. So how do we adjust for this? Well, first we keep all these at 0%, and let's hop to the runway probabilities and see what it looks like. So currently, the Electric Coin Company has a burn rate of about, let's say, $850,000 per month. And this is me using public info. I'm sure that if we had private info, it'd be a little bit more specific, but this is a rough number. They have indicated that they would like to accelerate this up eventually to about $1.1 million a month in a recent blog post. So what we can do is we can look at how the company fares under a variety of Zcash prices, which is a very simplified model, but it helps us at least get a number somewhere. So what I did on the bottom here, and is this chart in the bottom too small, or can everyone generally make out these numbers and things?
I can read it. It looks a little small.
Okay. I find it too small, to be honest.
Okay, so I'm trying to squeeze it all in, so we can zoom in and pan back and forth. So what I did is I started with, under certain prices, and I go again, starting at as low as $11 and going as high as, $800 or so per Zcash. I have the starting cash of about 3.5 million US dollars. I have an expenditure rate, which I've set to 850, but is adjustable. And I have the income that they can assume going forward. So this is the income rate at 12.5 going forward until until November 2020. And then here's the income rate at 6.25, at 3, so on and so forth. And then I've highlighted red if there's a situation where it falls below their safety threshold that they've indicated, which is less than 12 months of funding for the system. So in this case, for 850,000, that is 10 million a year. So if their assets ever dip below $10.2 million, then it's a worrisome, it's flagged as a worrisome case. So in this chart that I plotted here to help show the probabilities, orange are the amount of funds that are available in November 2020. Blue, these blue dots, are for November 2024, and gray, which are mostly off because they're really to the left, are for 2028, since ideally you want to look more than just 1 year ahead. So I put these lines here that indicate where the situation is, or I put these lines to indicate where the company generally feels comfortable. So they're comfortable-ish in general on the right of these lines, and they're uncomfortable to the left of these lines. So you can see that for the majority of the circumstances with
so sorry, which is the purple line and which is the red line?
Okay, so
that's the current burn versus the projected burn.
Yes, thank you for
right?
asking all these clarifying questions. Are really important. So the red line is where the amount of cash that the company would need to feel comfortable, or to have a 12-month runway at a burn rate of $1.1 million a month. This purple line is where they would feel comfortable, where they would have a 12-month runway at $880,000. Well, yeah, $880,000. So I can adjust this slightly. $880,000 expenditure per month. So the Electric Coin Company has indicated in a blog post that they would like to have 12 months of assets on hand for their given burn rate, or else they would consider pivoting for Zcash. So what we can see here is if they receive no future funding, so after that date it ends, that by the time, sorry, back here. So by the time it is 2020, so before the block rewards even end, at an $880,000 a month emittance rate, they already do not have a year runway under most circumstances. So I just want to indicate that to be really clear here, that under most price scenarios, so if you take the current price of ZAC and you have them continuously receiving the block reward, as is currently the case, 8%, that the majority of the time they are not going to have a year of funds available for them to operate. So that's the current state. That is with them receiving 8% of the block reward. In order to make it about 50%, I'm going to just test some random numbers here on the fly. If we drop it to 750, that as their monthly burn rate, then that gets closer to about half the time having enough funds. Again, with using the current ZEC price as reference. So this basically indicates that, since they're getting about $1.1 million a month with current prices from the block reward, and spending about $750,000, or spending about $880,000 a month, they aren't able to get enough money to have a full year's runway at that expenditure rate to the level of comfort that they're hoping for. Any questions so far? Okay. So if it's accelerated to $1.1 million a month, which they indicated that they would really like to do, we can see it's unfortunately the case where it's further to the left. Under most circumstances, they generally still have some cash, but they don't have a year's worth of assets after the founders' rewards end, as is the current status quo. So, and to a question in chat, yes, I will be sharing the document after the live stream, so you can verify all these numbers. If I made a mistake, I can look like a fool in front of everybody. So, that's what the status quo would look like. In order for them, the Electric Coin Company, to still have funds, let's use 2024 as a comfortable number. They would need to substantially reduce their burn rate below $500,000 a month, which probably is unrealistic given their current operations. Yeah, so in order to have, with the current price of ZAC, assuming it stays the same, they would need to drop their expenditure rate to about $300,000 a month in order to have have funds through 2024 if no future issuance changes. So that just helps you give a few numbers. The Electric Coin Company, to be clear, has indicated that they plan to accelerate their burn rate. They do not plan to drop it as such. This is not a plan that they have suggested. I'm just merely plugging in a number to help show you what that would look like. So hopefully this helps give people some perspective into, you know, what type of numbers they're advocating for when they are asking for future funds or not asking for future funds. If they're expecting the electric coin company to continue providing services, which they indicated they would not do, but if this is someone's expectation, they would need to provide only about $300,000 in expenditures in order to most likely have money, you know, after 2024. And to be really, really clear, again, that's not what they indicated. So Dara, what would you like to say at this point?
So there's kind of a minimum number of people you can employ before everything falls apart. So it's not that you can halve the number of people, because at that point it becomes impossible to do the work to get sufficient code reviews, to get sufficient auditing, to catch mistakes. It's not a linear relation between the amount of money you spend, even if we're just considering the expenditure on wages. That's not a linear relation between total wages and what you can do. It's a very sharply non-linear one.
Absolutely. Andrew, do you have a comment too?
Yeah, so I mean, looking at this, I thought I had like a couple nitpicks, but it actually surprises me how close to pretty reasonable that gets. I mean, the nitpick that I had in mind is that maybe we'll see this when going through all of the proposals, but you know, right now the 8% has gone, I think, to like ECC, but the remainder of the 20% that goes to block rewards is just part of the founder's reward, which goes to including investors. I would think that like maybe a median of the proposals have something like, for example, 10% to ECC and 10% to Zcash Foundation. So I would think that as a just kind of starting point, that would maybe be a little bit closer, but still that's like a 25% difference. So still kind of in the same range. I guess the only other thing that I guess what I was going to say directly contrasts with Dara's point, which is to say that, you know, even having that runway, I think it's quite, you know, plausible to be able to, you know, gracefully scale up and down the amount of, you know, projected activities based on that runway. So it's not like if the price starts to drop and then the next month comes less, it doesn't immediately mean that you curtail all of the activities. It means you kind of change the projection of what you know, plan to do for the next 12 months.
Yeah. Up to a point. And then it falls
up to
apart.
a point.
Then it falls apart.
Yeah, the problem
is it clear what that point is?
You have to keep employees around, right? You have a critical mass, both on the foundation side and on the company side, of basic engineering to keep the system running, plus the cryptographic sides of it and the protocol stuff that's advancing the state of the art. And you can't really, these aren't Amazon EC2 instances. You can't just turn them on and off even on like 3 months notice. So it's scaling is dicey.
Any final comments on what the status quo generally looks like? Are there any other numbers that people would like to see with the status quo block reward for Electric Coin Company? Okay, apparently not. Okay, so hopefully that helps people understand what the type of expenditures would need to look like for that to be partially sustainable. And again, it's still variant on the price of Zcash, but you would need a circumstance where the price of Zcash is, you know, $115, $120 or so for the current block reward issuance to give them a year of runway within a year's time. So I think that's just an important point to mention. So at a specific burn rate of $1.1 million a month, the price would need to be about that high. Okay, so then we can move on to the second proposal where someone this is again by Mist FPGA. I can pull up the link in 1 second here, but they advocated for a protocol level donation feature that is opt-in. So the default is that this will not be the case. And to be clear, yeah, NYE, OIFY, and YouTube, it is including the halving in future year calculations. So for the second proposal, they recommended a protocol donation feature, which is opt-in. By default, it's no. And this is something that would be baked into the protocol so people can more easily make a payment to the ECC or whatever entity they plan to support. And in this case, since there weren't really any numbers, one thing I want to note is that there's two percentages here. So there's the percent of how much people who do opt in donate, and then there's another percent of how many people opt in to donate. So these two different numbers. And from the ECC's perspective, I can understand why they don't want to necessarily jump on this, take this leap of faith to most likely be in a smaller proportion than what it currently is, because ultimately there is a sort of tragedy that commons where people assume everyone else is going to donate. Are there any numbers that people would like for me to try messing around with here? I can go through the emission schedule and I can show, let's suppose 10% of the people donate 5% of the rewards. We can look through numbers like that. Dara.
Just a technical point on tragedy of the commons. It can still happen if everyone doesn't assume that everyone else behaves altruistically. If you know that a tragedy of the commons will occur, it'll still occur. So that assumption is not what it depends on.
Okay. I'm going to let other people. No, go ahead. Sorry.
I wanted to, another thing that's coming up in the, I think there's a misconception that the Founders Reward is like still sitting in a bank account somewhere, and that the portion that ECC used is just still there, but it's not. It was used to fund operations. That's my understanding. I'm not super deep into ECC finances. I only have the information that everybody else has publicly. So I wonder if like Dara or Strad could jump in and clarify, like, we're talking about there's limited runway available. There's not like millions of dollars that are just sitting around available to be tapped in. Zuko, as a famous person who got a lot of ZEC through the Founders Reward personally, has like donated a lot of those funds. For example, he was a big donor to the Zcash Foundation. He's disclosed that publicly. To the Open Money Initiative, there's like one more that he donated a big chunk to that I don't remember. But I just want it to be clear, like the community should definitely understand that there's not, there's no like pot of fairy gold that we can draw from. That's why we're having this fairly urgent discussion, is because we need to figure out like whether it's some kind of protocol-based reward or not. Like Zcash development does need funding. It's not just going to happen without funding, without like new, and I mean new funding. Like I think that personally, here I'm speaking for myself personally, not for the Zcash Foundation. I think that donations are a total non-starter. Donations do not work for open source development. Like maybe, I don't know, GitHub sponsors, maybe that'll make it easier, but really that's not something, especially for a project of the complexity of Zcash, which is built by people who have other options for the most part, who could make more money working on something else. But because of the Zcash mission and because it's such an interesting piece of technology, we have this, pretty amazing group of contributors. But that's not, people need some amount of economic certainty to be able to sustain that, which is kind of goes back to the team stuff that Dara and Ian were talking about earlier. Okay, I think that's my interjection. If anyone else wants to chime in on that, looks like John wants to say something.
Yes, John, can you go ahead?
Yeah, that's actually like I liked how you mentioned with like what the ECC and their financing. I'm kind of curious on the sense of like, have you guys had like anyone that's working with ECC? Has there been like a specific strategy in the sense of like, as the rewards come in, has it been something where the ZEC was like on the books, and as the financing, as the money, the capital was needed, it was sold and spent, or was there like a specific strategy where, you know, on this amount at this day or this month, this quarter, we have to get the ZEC? Like, mainly, like, what was the strategy in the sense of like how to manage the volatility of the Zcash that was coming in?
So neither, like, obviously you can't speak on anything that's not public. But hang on a sec. Fix my internet. So pointing back to Nico's talk at ZCon 1, where he pointed out as an example, so that was as of, hang on, someone got their...
I just muted John because there was some background noise. He can unmute himself when he's ready to speak again.
I don't know which one did it.
Okay. Yeah. So in giving June as an example from Zuko's talk, ECC had $3.35 million in the bank, but that's, you know, risky fiat that could go to zero at any time. So they also had some ZEC. And so looking at the talk, it was about 30,000 Zcash on hand. So you can look at, obviously, June was when the 8% started. So it was 4.2, I think it was, whatever the numbers were, up until June 2018, which is also just a note for the model. But you can sort of extrapolate from that, as well as from the transparency report, that keeping sort of reasonable amounts of both on hand is to some extent what ECC has been doing. Obviously, you know, if you're paying employees that need to be paid in fiat or whatever, then you need to have enough to be able to cover your monthly expenditures, and you also need to have enough so that if, say, you know, if the price of ZEC went to zero today, how is the company going to continue on? How are people still going to feed their families? And likewise, you know, you don't want to, I can't really say any more than that, because I can only go off what's public. But yeah, there.
First of all, I'd like to agree 100% with everything that Sonia said. I mean, personally, you need financial security. I would not be prepared to work for Zcash if all of the money was coming from donations. That's ridiculous. It's literally ridiculous, because I have to pay rent. So no, that won't work.
Okay.
It is worth noting that, but sorry.
Go ahead.
I was just going to say, it is worth noting that, you know, as I think Sonia mentioned before, you know, and Zik also alluded to in his talk, like the marketplace for engineers doing the kind of stuff that is necessary to work on Zcash is reasonably large, and so, you know, there are a number of people. You know, people who are working on Zcash are not here because it pays well. No, speaking for myself, I am here for the privacy mission. I am here because I really enjoy working with zero knowledge proofs, and I would love to be able to continue on that. But that does cause it does add significant uncertainty to what happens? Will I have a job in 2 years' time? You know, that has to be factored into my considerations about working on the Zcash protocol when I am deciding how I want to spend my time and how I want to spend, well, weekends and things.
Thank you for your perspective, Strad. Any final comments on this second proposal other than people voicing concern about a donation type model? Okay. Let's move on to the third one then, which is by Andrew Miller. So Andrew, since you're here with us, can you give a quick overview about what this looks like? I'll link your proposal in the chat for people to see, and then I can go through the numbers to show what it looks like.
Sure. So I think the proposal is conceptually quite simple. instead of the current plan. I don't know that you have on the spreadsheet up. Okay, correct me if I say the wrong number, right? But so the 20, it's similar to right now, where 20% of the block reward goes somewhere other to the miners. And based on the current protocol, after the halvening, then 100% of the half of new inflation would go to the miners under the current software. The proposal is still to have 20% less go to miners. All right, so the mining reward would actually be cut in half rather than slightly less than half as the current software would do. And for what to do with that 20%, miners would have a choice within some limited set of options of where to direct it. So I like either calling this like a miner directed dev fund. I think that's the most unambiguous phrasing. So the idea is that they would be able to choose in each block by adding metadata to the block as they mine it. Whether to burn that 20%, whether to allocate it half and half to the Zcash Foundation, to the ECC, or potentially to other development entities like Parity. I have no idea what others would be, interested in something like that. Basically, they'd be able to choose between a basket of how to allocate it to development organizations or to burn it. The point of having the burn option is to make it so that this is actually still opt-in, like it's not a mandatory fund that goes to a particular entity. So I think that counts as considered a donation and opting in. But it does remove what they don't have is the option just to keep the 20% for themselves. And so to me, this is the right kind of combination of incentives, but there are a lot of kind of directions to go in terms of thinking of like, how that would play out. Like that seems like it could create the incentive for miners to say, oh, well, we'll give the 20% to whichever organization promises to give us back half of it. So there's kind of like a game theory rabbit hole to go down as to what that would go. Okay, but anyway, that's my summary of what that is. Hopefully that was clear.
Jara, would you like to say something?
Yes. So because of the burning option, this basically makes the total issuance unpredictable. I mean, it's not that people can't burn money anyway, but they won't because they want to keep it. Whereas in this case, you're essentially giving them an incentive to burn money because they want to lower inflation. And I'm not sure that the overall economic consequences of that have been thought through.
Yeah, if I could just respond that so there would be if you're a holder of ZEC and also a miner, then you would get a slight boost to your proportion of the entire pie of all of the money issuance by voting for the burn option. My argument, I think, would be that unless you're a very large ZEC holder and also a large miner, then the effect of reducing that total amount of inflation would be nearly imperceptible. So I don't think that would be a direct incentive that would steer people by greed to just clearly do that. But yeah, that's otherwise technically that's a clear and solid point.
Ian?
Right. So there are a number of major downsides with this proposal. The first one being the greed issue, which I don't think is that minor, simply because people will do what they think might give them an edge versus, miners are in it for the short term. They have equipment costs they have to pay out. So I don't really see the incentives being aligned for long-term funding. There's a second problem about the stability of what the miners can do. And then the real problem is it also seriously hampers, for example, if the community wanted to go to proof of stake, you would probably imagine that the miners wouldn't really want to fund that. And so then you've got a blackmail situation. We don't know where the miners are. We don't know who they are, at least I don't, but I am very hesitant, if it is the case that they are concentrated in China, to put the funding mechanism for a large piece of privacy enhancing technology at the whims of a jurisdiction which is incredibly hostile to privacy enhancing technology. It does not strike me as a plan that is likely to lead to success.
Thank you. Sonia, you said you had a comment?
Sorry, Ian said what I was going to say, which was I think the possibility of proof of stake, knock on wood, that proof of stake turns out to be a thing that works in the long term, which is I personally think is still kind of up in the air. Yeah, I have, so again, speaking for myself personally, I've really mixed feelings about having minors have a say. I like that it's consensual. I don't like the idea of giving the minor. I don't like the idea of giving minors more of a de facto sort of governance vote than Zcash holders or Zcash users, or however you want to define it. Yeah, like basically what Ian said. I don't want Zcash to be held hostage, and it is worryingly possible in this option. But on the other hand, it's also nicely gives the minors a say, allows them to sort of vote, not vote literally, but quasi vote with their skin in the game. So I like that part. But yeah, I think what Dara and Ian said is a significant drawback.
To play a bit of the middle ground here, I think that it is very interesting. We're to be clear, we're starting with the status quo where the ECC, the Zcash Foundation, the founders, have no projected additional issuance after November 2020. And to say that the miners who originally were entitled to this piece would or should be expected to initially just hand these over based off a set of community feedback, I think it is more palpable to them generally to say, okay, you still determine what happens with these funds. You have a few options. You can burn them and say that these entities do not need any future funding. And you're acknowledging the general work that they are doing in securing the network, because to some extent, the Zcash network is, at the moment, and will always be, unless you switch to a proof of stake type system, beholden to the miners because they're providing the security for the network. And I know that there are many other entities that provide the security. You need to fund the vulnerability response process, for example. That's an example of security on the network too. There are many different parts to security. But to say that they can allocate how funding is given to the foundation or the ECC, one concern I have is I think that if there are people that would like to give funds, they're most likely to give them to the Zcash Foundation than the ECC, and not necessarily for a functional reason, but just a perhaps perception reason also. I think that even those that are, that truly want to maximize the value to the network, if their needs were perfectly aligned, I think they would be more likely to give funds to the Zcash Foundation also. Hopefully that stratifies both arguments relatively accurately, but it is a little, to some extent, I just want to make sure that the conversation isn't about a certain entity being entitled to these funds necessarily, unless it is actually in the behalf of the miners because they currently are entitled to these funds. It's not the other way around. So several people, yeah, go Ian, sorry.
I think the accountability point of not giving the company funds just for them to do whatever they want is very important. Actually, personally, I think that giving the company a set of funds without any visibility or any accountability to the community of what they're doing with it would be disastrous, not just for the community, but actually for the company specifically. But I wanted to push back against this idea that the miners deserve the money. There's a reason why we don't fund infrastructure in any country I can think of by voluntary donations. There's a reason we don't fund roads by voluntary donations. We don't ask that Walmart, who uses trucks to ship around all the stuff and can only make money because the interstate highway system exists, to pay for it out of their own goodwill. And so I don't morally agree that just because that was where the trajectory was going, and just because that was what was going on, that the miners have a right to those funds fundamentally. I do agree that we owe them some amount of notice and some amount of discussion because they did make investments in infrastructure based on this. And that there should be accountability mechanisms. But the moral position that, they get the money just because ignores all of the other things that go into making the very system that they are making the money off of.
Indeed, and there is the trade-off too with valuing the investment in that infrastructure, because people aren't going to, in large quantities, just make mining farms to support ZEC. Otherwise, you would argue that, oh, well, I'm a large ZEC holder, I want to have my network to be secure, therefore I'm going to buy a large number of miners. That's, again, another tragedy of common situation where you assume that large holders will just secure the network, and that's not necessarily the case either. So there is some middle ground in that capacity where a block reward is sort of needed, at least to prevent a tragedy of the commons situation with mining.
Can I make a point here that hasn't been made, which is the effect of difficulty adjustment? So the miners are there to put transactions into blocks and to create a total ordering on blocks and to make sure that the blocks aren't rolled back. Basically, that's their role in the protocol. If we didn't need to do those things, then we wouldn't need miners. They are paid extremely well to do those simple things. And the effect of difficulty adjustment is that the more miners there are, sort of the more the rewards are spread out among those miners, and therefore what tends to happen is that the whole network spends an amount on electricity consumption and other sort of costs that is some proportion of the total issuance. But it doesn't mean that if you increase the total amount going to miners, then each individual miner or a miner with a given amount of hardware investment is getting more, because the difficulty is such that the easier it is, the more miners come in, and then the difficulty raises. So you effectively have a situation where mining is only ever going to give you a small profit. That's just how it works. You can't increase the mining rewards by, say, 15% or whatever, and expect everyone to make 15% more profit. That's not how it works.
Yeah, I completely agree that the number of people, in an efficient market generally, who mine will scale with proportion to what reward is available. It doesn't mean that if you increase the block reward 10%, that they will get 10% more income. That income is distributed among a larger pie.
I think that assumption is being made implicitly in many of the discussions. It is being implicitly assumed that the amount of block reward that goes to the miners is the miners' actual reward, but no, it isn't.
I think a more accurate, it may only make sense for large manufacturers of mining equipment.
Yeah, if you have a monopoly, then maybe it does. Maybe if you're Bitmain, then you have an incentive to increase the mining reward.
I think we can, unless there are final comments here, I think we can move on to see what this proposal looks like on paper. Again, one limitation, as was already pointed out, was that this is 20% that is allocated per a miner's choice. So it could be as low as 0%. It could be as high as 20% to one entity. It would vary. So is there a reason not to use 10%, or is there a number that some other people would prefer for me to try here?
Let's start with 10%.
Okay. That's part of the fun here. We'll try 10 and see what it looks like. Okay. Ian, what would you like to say?
So actually, I had a question. Do we want to go into the details of these numbers, or is the philosophy of what's going on all these plans of larger interest? I sort of take the view that none of these plans are final. Frankly, I don't think we'll do one of the ones that's actually on the list. Like I expect the pace of proposals to increase. And I suspect the numbers are all going to be different and probably maybe better done for some kind of different medium of discussion. But the back and forth seems useful. But I'm not the target audience of this, so I don't know.
Just as another point that we could consider, because Grin is a network that, as was mentioned earlier, had some funding issues and now has like voluntary donations built in, or at least most of the money pools have it. I just did a quick search and pulled up one of the pools, which indicated in February 2019 that the average donation was 0.85%.
Thanks, Greg.
And clearly, that amount is not sufficient to fund protocol development.
Yeah, just to give, I mean, it is a little different when the alternative is burning it rather than keeping it. There's a small difference there, but it's important to keep that in mind, that generally when it comes to giving money to someone else or keeping it yourself, people would prefer to keep it themselves to a large extent. Andrew, did you have something?
There we go. Okay. So, I mean, a lot of I do wonder if we could be better talking, using this time to talk about some of the kind of philosophical or value issues, just because a lot of the proposals, I think, have quite a lot in common. Like, I think all of the remaining proposals that we'll talk about are similar in that they do not propose to change the overall issuance rate. They only propose to, decrease the amount of mining revenue or mining rewards. So in as much as we're talking about the, value of it, are miners entitled, or is that a reasonable thing to diminish, then, that's applicable to all of the proposals. So I wondered if it might not be more useful to quickly go through a lot of the remaining proposals and identify what are the most interesting differences that we might have values conversation about. That said, I do like that you have this model and it is reasonable to go through that. So maybe I'll leave that decision up to you or anyone else chiming in.
Would it be useful for me to throw in some numbers to give people a little bit perspective of what the edges of different cases are, just so people understand what 10% looks like, what 20% looks like, what number would make sense to ensure development through 2024 and 2028 and still have a year runway? In my opinion, it's important to have those critical numbers understood by people so they have a better understanding in participating in these philosophical discussions. But ultimately, I think we should have plenty of time for those discussions too. I just want to make sure that it's not people arguing like yes or no on either extreme, which it doesn't seem like that's the case here, but I know it is in many circles.
Would we be able to do it once and for all somehow? I mean, I feel like if we start talking about percentages, the nice thing is that's pretty much invariant to all of the differences of the proposals, which are kind of like how and who decide. So yeah, sure, maybe we go through that, but how do you envision it going? Like if we talk about 10%, then can we kind of just leave that at 10% the rest of the time and then move on to the differences?
Yeah, I can do that if you like. Sure. Let me share my screen then, and we can do that really quickly now, and then we can spend the rest of the time talking about the higher level stuff. Okay, so I set the future reward issuance to 10% here. We can jump into what it looks like for a runway scenario. Again, if we set the burn rate to $1.1 million a month, which is what they anticipate, they're still having issues. The electric coin company would still have issues in the short term, as was indicated. In the long term, they fare a little bit better. You can see these blue dots are a little closer to the right here. Let me set this back to 0 just so you see what it looks like. And you can see they're off the chart. So it moves after the block reward issuance into a number, like a more reasonable number, but still it is strongly negative. Ultimately, what I can do is I can adjust the numbers then just to 20 to show what those look like too. But ultimately, at this burn rate, a huge proportion of the block reward is needed. So you can see with 20%, there's a huge variety because this is several years out, so a huge variability. But in most scenarios, they're coming out ahead where they have a runway. So if you need to keep a number in mind, 20% generally means that they are able to have the electric coin company has the runway, assuming the price doesn't go too crazy, that they're hoping for. Again, it can still go all over the place, and they may still not have a great runway. There's still about a 40% chance that they don't have the runway they're looking for, but it's still, at least we're talking a positive number here most of the time, right? So that helps give some perspective. If I was to bump the block reward to a certain value where this blue dot is at, like, half the time they're getting a runway, it would probably look something like 18 or so percent here in the future. Keep in mind, though, that for the gray dots after 2028, we're still looking at a number that's around 0. So even with a 20% perpetual reward, just because the block reward decreases over time, by the time we're getting ready in the future, Zcash Electric Coin Company, is looking to the future, it's still looking at, on average, a negative number with the current price in 2028, even with 20%. So in order to make this a more positive number, I mean, it's up to the community to determine whether or not they feel that an accelerating proportion of the block reward is justified. If they're going to assume that there's going to be a price increase with this development, there's many things that the community need to consider. But ultimately, the 8% current proportion of the block reward that they receive is not enough to fulfill the current level of initiatives that the electric coin company would like to pursue. So they haven't given a number for what proportion they would like, but it looks like it's around 20% that would be allocated just to the electric coin company based off the horizon and burn rates that they really feel comfortable with. So that's a quick, really, really brief high-level overview. Hopefully it gives people a little bit better understanding with the burn rate that the ECC has hoped for to feel comfortable. If it would have to reduce the burn rate or further increase the block reward in order to, meet better terms, essentially. It needs to be more financially healthy. All right, so unless there's a reason to come back to this model, I think we can put it on the wayside at the moment and talk more high level, because I know that's what most people are probably interested in. But this is useful for people to have an effective conversation about what proportion is needed going forward for the ECC to have the initiatives that they're hoping the community will be able to provide for them. All right.
It's very useful. Thank you.
I think it's a lot more useful to actually look at those numbers and see what they look like rather than just saying, oh, 10, 20% or whatever. The ECC has asked for a specific number, and so it's important to figure out what proportions of block rewards and price distributions are in that case, and trying to figure out what the likelihood those are actually going to be met, or if sort of we're hoping for a price increase of ZEC to $200 to make it happen. There's a ton of different variables there. Was that about what everyone was thinking? Are these numbers higher or lower than people were expecting? I would love to hear your perspective, because you may have had some internal conversations about this with the ECC or with the Zcash Foundation, but as someone who's outside of both of those entities, I've sort of just been reliant on the community forum posts and also this model that I put together. So I don't know how much other people have looked into what these numbers really look like.
Well, I guess I'll jump in very quickly. So the first thing that I just wanted to mention, just to be explicit, that model was only for one entity, and the ECC, and not the foundation, which has a very different foundation. Has a very different financial picture at the moment. Lower burn rate, but we also haven't contributed as much. Like really not nearly as much as the ECC. So keep that in mind. And as I mentioned earlier, we're going to have a more detailed statement in a couple of days that is a bit more explicit about what that future expected runway is at various levels of potential burn and expenditure. But I think, like, in my mind anyway, like 20% going just to the ECC seems very, very high to me personally, and I didn't expect that. I think that there is this assumption that I think is a valid one, that if you are funding groups that are legitimately improving the value of the protocol, doing state-of-the-art cryptographic research, actually deploying it to production, and continuing to build, upgrade, and support given protocol, that would have the effect, in my mind, of changing that probability curve quite a bit in terms of longer term expected value. So I suspect, and this is just me again personally, but I suspect that on the ECC side, there is that assumption that that a lower portion of the block reward would be appropriate because there is this strong belief that their work would, potentially increase the value of the network for everyone, including their ZEC holdings. But that's just my view.
Luckily, with these models, we can test for specific prices. So we can say, let's say that we give them 20% of the reward. Let's say that the value of Zcash increases 25% as a result, or whatever number we want to test. We can see what those runways look like also.
Yep.
But it gives us a specific number to hone in on. And if we don't meet those numbers, then we know much earlier if there's a concern, if we project them ahead of time.
Yeah, so I really appreciate that model. That does shine a lot of light on us in a certain way, but I don't think the company should get anything. Like 20% would be an extremely large thing to go unilaterally to the company. Anything over that, I think both the community and now speaking very specifically only for myself personally would be utterly unacceptable. And that's just not going to happen. It's not viable. And also there is the company, the $1.1 million burn rate is aspirational, I think. They can adjust up and down, or down more so. They have delivered stuff on less. I mean, Sapling was not built on a $1.1 million burn rate, as far as I recall. But they're not getting that. That won't happen. Like, that's really all I wanted to say.
Dara, do you still want to chime in?
Yeah. So there may be a view among some of the community that there's a good chance of the price mooning, that we might repeat the price history of Bitcoin in Zcash. I don't normally talk about price, but I think if we just consider what's realistic, that probably isn't realistic. I would love to be proved wrong.
So from my personal perspective, and I know that Sarang Noether has voiced this opinion, and he was unfortunately unable to be here today, but I would like to see from the Electric Coin Company different burn rate expectations. So they've indicated that their current burn rate is about $880,000 a month, and they would like to increase that to $1,100 a month. If the community feels that it's warranted to either hope for a large price increase, or to hope or to give them a large proportion of the block reward, then perhaps that's appropriate. But I think at this point it would be prudent to look at what type of services it could provide at different levels, perhaps that are lower than its current burn rate of $880,000 a month. Just in case we have an unfortunate circumstance, it's good, in my opinion, to be prepared for that. And I know that we all hope the price will increase, but that's just not the way things work. Past results don't mean anything, but Zcash's price generally has been depreciating. over the past several years for a variety of reasons, partially related to high issuance, but it's hard to build a company model. Again, I don't represent the ECC, but it's hard to have that high of a burn rate with such an unpredictable future. Is my personal perspective on it. So I've covered most of the things I want to cover. Again, most of the other proposals were some variation of between 0 to 20% of an allocation to a block reward. It looks like no one has proposed over 20% going to a combination of entities. So at this point, we can open it up to other comments that people have on the future of the Zcash Dev Fund, the Zcash Founders Award, and where people hope to see it going forward, what they hope it's used for, and how they hope that the conversation will evolve outside of this chat. ML, please proceed.
Hi. Yeah, I just wanted to make a general statement. Most of the arguments, so I work for Placeholder, and we have a proposal with 20% going to fund development and other things. And many of the arguments in our proposals have already been said by other people, but I wanted to make a general comment to kind of maybe explain a little bit the vision behind our proposal. And it's this. So the fact that something like Zcash exists, I think, in terms of technology, the network, and just the people that have come together to make this thing a reality, I think it's quite an incredible thing, I think. And the fact that this technology has this native way of funding itself makes it even more incredible. And, you know, with that in mind, I think, at least for me personally, it's a no-brainer, basically, whether this opportunity should be used. So, like, this opportunity exists to fund this quite incredible thing, and nobody can predict the future. And it's just, it just makes a lot of sense to me just to basically, use this opportunity.
Yeah, thank you for voicing your perspective. Yeah, as you indicated, you had a proposal currently open, which is to allocate 20% of the reward to, you gave a variable threshold. You said about 70% protocol, 30% growth. Can you explain a little bit more what you mean by the protocol growth and how you came to that initial 70-30 number?
Yeah, well, this 70-30 split is, you know, open for debate, and we are currently working on the official zip draft for the proposal that's up on the forum. So yeah, it could be something different, but the general idea is that it is my understanding, our understanding, that the Zcash Foundation has said that they would prefer not to be the sole recipient of funds, and they are currently running a grants program, and there are just different kinds of work that need to get done, basically. So just splitting the funds so that there's a second pool on top of the more technical and specialized kind of work that is perhaps more easily accessible to the community at large. So that was basically the motivation behind this, to, you know, kind of similar to the existing grants program. But yeah, given that I don't know how much of the current funders reward goes directly to the foundation, but just ensuring that there is this second pool of funds that could be governed perhaps more inclusively by the community, and also be more easily accessible by the community for any kind of work, not just technical work.
Thank you. Dari, you had another comment?
Yeah, I'd just like to say that for decentralization reasons, I'm strongly in favor of the foundation getting a predictable amount of dev funding, because I think they need that in order to be effective and to sort of take away power in a sense, but in a good way from ECC.
Yeah, and I'm just going to jump in to both answer a question from one of the YouTube chats and to agree with Dareth's point that and actually what Mario said earlier, just to confirm that the foundation would prefer not to be like a sole recipient of any sort of dev fund for exactly that reason for decentralization and for distributing power amongst many participants. In the case of like that particular pool, you know, I feel like the pool that's suggested in the proposal that you've been putting together, Mario. I think that it's possible for someone like the foundation to administer it, but with different sort of rules than how we would approach the rest of our funding from a dev fund, for example. If that was something that would be you know, something that we could like incorporate into the pre-existing grant program and then maybe expand it out or create a new process around it. I think that's certainly a possibility. But yeah, just in general, I also like personally believe like I fear an outcome where there is one organization controlling too much of Zcash development. I think there's ample reason to do that initially, and it obviously wouldn't exist if it were not for the ECC basically you know, unilaterally supporting it early on. But we need, in order for it to be a protocol that'll last generations, that kind of distribution of power where there's not a single organization controlling it is very much necessary.
Is there any scope in this conversation that people wanted to cover that we did not yet, or has?
Yeah.
Go ahead.
I think there's a major thing that's been lacking in most of the forum discussions I've seen, which is, so we're going to hand out this money. Let's take the straw man proposal that's 10% to the foundation, 10% to the company. There needs to be, for obvious reasons, an accountability mechanism, right? First, this is the right thing to do by the community. More importantly, I think actually it's necessary for either organization to succeed. You don't want to be too insular. You don't want to have one person making decisions without any feedback on the necessity of listening to anybody, right? There's generally a reason why you know, companies are accountable to the shareholders and a board. And that's part of why, for example, the Zcash Foundation has a board and has these various ways of getting signals from the community. So the question is, what does this look like? And one option is to micromanage it, to have the community vote on proposals and such. And I don't think, given the exact point we are on the technical maturity curve for cryptocurrencies, and specifically for strong cryptographic privacy, that that's the right case. On the other hand, I don't think there should be nothing. And so we should all be thinking about what that looks like. What is it? Is there some set of like board members, some technical advisory panels, a voting process, which I don't think the technology is there for, but there needs to be something. And we haven't really thought through the implications of this. And for example, what the distinction is between, you know, everybody agrees that the Founders Award should go away, and that the next dev fund is not going to be paying back to the investors or the founders as a profit or whatever. It should just be paying for like engineering effort and employees and such. But what's the distinction between legitimate compensation and paying dividends? Because you could structure it in such a way that it looks like you're just paying people legitimate compensation, but you pick the legitimate compensation at $10 million a year for several people. And I don't think anyone would do that. In fact, I think they'd probably do the opposite and undersell themselves and then not get what market rates are. But what these mechanisms look like is dicey, and we need to think through it.
Absolutely. I know some people on the Zcash forum have expressed accountability concerns, and that those that have generally are more likely to support the status quo, possibly for those reasons.
Maybe a bit biased here. I mean, my job title says governance researcher, and if you're walking around with a hammer in your hand, then obviously you're looking for nails. So definitely governance is the key thing here, in my opinion. There's an opportunity here to build something of lasting positive value for society, and there's an obvious funding mechanism for it here. So yeah, governance is really, I think, at least personally, where the focus of discussion should be.
Right, and to add one personal comment that I said at ZCon 0, governance is important, but the point of this thing is not to be an experiment for whatever crazy governance proposals people want to try in the blockchain space. We need something that's like practical and simple and not in and of itself, several PhD dissertations worth of research ideas and a political science treatise. So we should keep the scope limited, but we do need exactly some reasonable set of governance mechanisms and communication and some transparency.
I see Andrew's got a hand.
Yeah, so I'm glad we're talking about these accountability mechanisms. I agree that this is probably one of the most important things that hasn't been fully discussed yet, relative to other aspects of this, but we should be discussing more. So I think I agree with Ian on that. I mean, maybe we could go through what some of the options are for accountability mechanisms. I mean, so like the miner, directed thing that kind of has miners choose each block, to defund or not in reaction to what they see. I think other proposals that basically commit to something for a 2-year or 4-year period. I mean, there's always the ability to hard fork, to change it if the company is like, doing not what it's supposed to. But it's a lot more coarse grained. I mean, other potential options. This is the experiment that I think is not feasible to do, but like, wouldn't it be cool if a blockchain could be recognized as a contractual counterparty and then like take a company to courts to negotiate over breach of contract if they violated a contract that they stuck to? I think that that's infeasible, but it's fun to think about. I mean, short of that, I guess I can't really imagine that many more practical things other than like, are the transparency report style activities working? Is like providing if we basically say like, yeah, like more transparency reports, here are more things we want included in transparency reports. Here are like public statements about commitment to certain decision matrices, like we'll fund X priority and defund Y priority if the income doesn't match what we expect. I mean, kind of basically expecting and setting the social expectation that we expect transparency reports and forecasting of decision making. Those seem to me to be the most kind of practical accountability mechanisms, although they're still imperfect. They're maybe a little bit too coarse grained if hard forking is the only way to enforce them. That's as far as I got. Sure.
So I guess I should. So accountability is one aspect of it. And it's important, but I meant it a little more broadly. First of all, I don't think we should get bogged down in what the technical details of the governance mechanism are on this call. It's more so what are the parameters, like what granularity of roadmaps, for example, might the company and the foundation give out? What amount of visibility into finances might you have, right? Foundation's a US 501c3, so the answer there is pretty set, and it's pretty transparent. For the company, it's whatever they want currently. And then the real question is not so much not just accountability, but avoiding groupthink. I'm actually quite worried that what will happen if the company, say, were to get a stream of funds with no strings attached, is they wouldn't go embezzle it. They wouldn't go and do anything immoral because, frankly, those are good people there. But they'd also lose any contact with external ideas of what's going on and what should change. And likewise, there is the risk that the foundation has the same problem if the board becomes more insular. Right. So there's a question of how do we have an open discussion of what the priorities should be, what the strategic roadmap should be, and what level of input and who are we giving it to? Because on the one hand, transparency needs to happen. On the other hand, if we do this the wrong way, it'll look like, you know, the notorious problems that you know, public companies sometimes have with dealing with the market, except it's the cryptocurrency version. So this looks like, you know, Celebrity Apprentice cryptocurrency edition. It basically becomes like a reality TV thing. It generates drama that just distracts everybody from really doing the real mission of advancing privacy for cryptocurrency. So, yeah.
Dara, I think you're next.
So I think there may be an elephant in the room here, which is that ECC lost a lot of goodwill from a section of the community as a result of the ASIC mining issue. So we lost a lot of miners who had been invested in GPUs. And as it turns out, part of the reason that we couldn't just keep the protocol GPU friendly was that we needed to do sapling, and we needed to do sapling because of the BCTV 14 flaw. And so our hand was forced, basically. But there's still a perception that we kind of fluffed that from a technical point of view, which I don't think is actually the case. And maybe we wouldn't, maybe there would be more trust in ECC if things had gone differently. That's what I want to say.
I think Dara is right about that, and is actually I think I want to, if it's okay, this may be a little off topic, so Justin, feel free to shut me down if you think it would be better tabled. But so again, wow, maybe I shouldn't have said that I was going to be speaking for the foundation officially, because every time I've actually talked, it's been a personal opinion. This is another personal opinion. Based on my observations of, you know, I read the forum a lot, I follow the conversation on Twitter, I've been reading the YouTube comments right now, and it's really striking to me what a wide spread of opinion there is within the community, and how it breaks out differently depending on where you're looking at the conversation. So like, these are rough percentages, please. These are rough estimate percentages to just give you guys a sense of how I'm perceiving things. Sorry, I'm putting a lot of caveats in here because I don't want people to think that I'm making some sort of definitive declaration. But it seems like on Twitter, people who are like Zcash enthusiasts, fans, users, people who are devs like in the Zcash ecosystem have been fairly enthusiastic about the idea of having a new dev fund to replace the Founders Reward as a revenue stream. On the forum, it's been more like 50-50. Oh, and on Twitter, people who aren't like really embedded in Zcash, it's been maybe more 50-50-ish. Like 50% of them are like, yeah, well, like, why would you not keep funding development? That seems silly. And then the other 50% are like, how dare you? You should not, you know, fund development any further through the protocol. On the forum, it's like 50-50. People, feels 50-50-ish. Maybe it's more like 60-40 in favor of a dev fund against a dev fund. In the YouTube comments, currently, right now, there's a lot of people who are totally against it or have serious objections. It's just, it's you know, we barely hear from miners. Like, it's very hard to sort out what the community, like, well, for one thing, you can't coherently say that like the Zcash community thinks X, because the Zcash community has this spread of opinion. Sometimes you could even look at it as a continuum of opinion, from like keep it exactly as is, no new dev fund whatsoever, or like, you know, big new dev fund. And that's a hard part of this conversation, is that we have people from all directions telling us like, this is the obvious answer, you should do this, and it has no trade-offs, which is ridiculous, because any choice is going to have trade-offs. And I don't know, I guess it's sort of, I guess I want the community to know that, like, if you're voicing a perspective, please be aware that yours is not the only perspective we're hearing. Yours is not the only recommendation we're hearing. So from all sides, from all corners of the internet that have Zcash discussion, there are people who are both saying like no dev fund, and people saying we want some kind of dev fund. Which is why we're having all of these conversations and long discussion, is to try and like really sort things out in detail. But I guess I want that to be known and articulated, that there's no unanimity at all right now. And if anyone wants to push back on my sense of things, like, go for it.
No, I agree, and I think there's a lot of filter bubbling. So people are, with a given opinion, are likely to hear from other people with that opinion and to have it reinforced. And that happens in all social media situations, but this is certainly an example of that.
I saw Josh's hand up.
Sorry, just unmuted there. This is not to the sort of community unanimity, although I do want to say I agree, Sonia, that there's a diverse set of opinions, and depending on which corner you're in, and as you said, Dara, there's like a bubble that you might be in where you're reviewing it a particular way. And at the risk of maybe projecting that image out, or using a non-profit hammer, like as Mario said, using the governance hammer, the one thing that I wanted to get back to on the accountability point, and I think that is something that has basically been at the core of a lot of this discussion, even if only in the subtext in a lot of these proposals, is how do these organizations really continue to support the protocol in a way that's accountable to community, particularly when you have like a mandatory or obligatory funding mechanism within the protocol. And in some sense, again, I'm demonstrating a little bit of my bias here, but in a nonprofit case, you have, at least for a US-based 501c3, you have reporting that you have to do that's sort of in some ways equivalent to the reporting like a public company has to do. And that reporting, while delayed a little bit, I think is actually still a very powerful way to demonstrate widespread accountability in the case where you are guaranteed a given dev fund reward. And I don't know that it's, it hasn't worked out. Maybe it hasn't worked out that way for us yet, because the foundation has really been limited in scope so far compared to the ECC. But I think one of my major personal concerns, and this is speaking as someone who's a deep believer in a lot of competitive marketplaces, is when you have a private company that is a recipient of one of these obligatory rewards. There isn't any sort of compulsory requirement of the kind of transparency or accountability that you would get normally from something like a nonprofit. And particularly, the ECC has done a lot on the transparency side, and I'm not meaning to diminish that in any way, but there are lots of things that we don't know, and which is certainly the legal right of an LLC. We don't know anything about the distribution of shareholders, for example, and we don't know anything about what the expected relative profit margin might be in the case that you're asking for a given runway, because that conforms to the entire investment thesis behind a given someone being a part of that private company. So I guess that's one of my I think the big open question is, you know, and in Andrew's proposal, I think that you can still have this kind of private company because there's this accountability mechanism built into the miners. If you believe the miners are, in fact, the right, you know, adjudicators for that kind of accountability mechanism. But you know, if you don't, then I think there needs to be some kind of I think a mandatory kind of accountability process that it goes far beyond like what you normally receive for a private company if a private company winds up being a recipient of it, if that makes sense. And again, that's my personal opinion, not official foundation stance, but just something that I think was sort of alluded to, but we should maybe consider that a little bit more more concretely.
Taking a broad step back to interject again and to expand on Josh's point, the Electric Coin Company is a private LLC, so they don't need to disclose anything. But that doesn't mean the community can agree that what they're disclosing is appropriate to receive or to justify an adjustment in the block reward. That's something where the community can say, we want X, Y, or Z in order to agree with this. If that's largely the opinion, then it's not like the ECC should necessarily use as their demonstration that they're an LLC. They're not a 501c3, so they don't need to do something. That's not necessary. That could be appropriate if they were not asking for funds or if they weren't trying to cooperate with the Zcash community for said funds. But since they are the Zcash community, however terrible that term is able to have some has some power in that negotiation process.
And so the core power that they have is running the software. That was the you know, as one of the people who was involved in building these defenses into Zcash, into network at the beginning, you know, we were very cognizant of the fact that, you know, if the community as a whole disagreed with what ECC was doing, you know, certainly in this first 4 years where, you know, it was baked in from the beginning, they could just stop running the software. They could go and run someone else's variant. If someone else wanted to support something with different options, they were able to do so. And that's something that certainly I personally felt was as Andrew pointed out, it is coarse. Like, you know, you're either running it or you're not. But particularly when we don't have things like, you know, I think 3 years ago there wasn't really a good way to do private metrics or any sort of like private sampling or polling at all. You know, there are still limitations on what can really be done nowadays, even without you know, with okay, I'm thinking of cryptographic protocols that could enable this. But at a governance level, like the core thing that people can do, if they don't like it, is, you know, don't use the software that ECC produces. And the fact that that the first major, like, you know, branching of people who were interacting with the economic chain of Zcash and then chose to move away, the first time that occurred was this year, to me is a reasonably strong signal that that the community as a whole were reasonably happy with how ECC were spending the funds that they were receiving from that first part. It would be nice to have it would be really nice to know actually what they want, because then we know, you know, it would be much easier to figure out what to spend our time developing for them. But yeah, I do like that as at least a backstop for knowing what people are thinking. If they're not using the software, then it's not valuable.
Dara, your hand's been up for a while. What would you like to say?
So I have been slightly disappointed that there haven't been more proposals about kind of soft governance mechanisms. I mean, I know. So what we're trying to do for the ZIPs in NE4 is define consensus rules. So it's natural that people would be focused on sort of how much money goes where, which is a consensus issue. But you can also define sort of conditionals that impose voluntary restrictions on what ECC does that don't take away its freedom to to exercise the engineering judgment, but that do give the community more confidence. And I was kind of expecting when this process started that we would have more of that, and I would like that to be an emphasis in the remaining process.
I agree. I think that's a really important goal because that's the ideal. Andrew, what would you like to say?
Yeah, I'd love to. I mean, could we maybe summarize like what you get with the mandatory disclosure requirements of a 501c3? And I wonder to what degree those like address, say, the requests for further information that Think Sarang Nutter asked for in the forum post. And like if beyond that there are additional, like even beyond 501c3 requirements that, you know, we would expect of disclosure from a dev company receiving dev fund rewards.
Josh, would you like to take this, or do you want me to take my best stab at it?
Well, a lot of it I can start, I suppose. I mean, a big part of it is really what's released in the 990, which shows a great deal of financial data, like very similar to what you get in like into a public company disclosure. So what you spent on various different kinds of activities, and it also shows your highest paid employees. Now so that is like a known kind of trade-off when you're going to join a nonprofit is you have to make your salary information public if it's above a certain amount, which I think is good for the organization. But, you know, it also honestly like constrains us in a way because we have to hire people that are willing to make that information public, and that can be a very sensitive thing for lots of people. So that's it in broad strokes. I think the thing that would be rather interesting to add on top of that, just as a personal suggestion, is you know, on the ECC side, you know, we really don't. There isn't a lot of public information about the sort of cap table and distribution of like who holds what equity, and particularly if the ECC has said that it's you know, the only viable business model for supporting Zcash is to have you know, mandatory dev fund mechanism. I think it's very important to know who would be the benefactors of that. On the other hand, that also kind of creates another tension between like people that'd be willing to have that cap table be public information, because it's, you know, generally people like to be very private about their finances, which is actually the whole point of what we're trying to build here. So there's a distinct irony there, but I recognize that. I would counter back that like I think it's important for organizations that are striving for that to understand that they might have to make like a certain degree of sacrifice in some kind of privacy in order to support a public private good. And that means like trying to you know, transition more to being, you know, having transparency for public orgs and individual privacy, and to the degree that you can achieve both of those things while still maintaining that degree of transparency in the organization level. That's what I would like personally love to see in some of these proposals on the ECC side. So. But yeah, feel free to add anything to that, Justin.
No, I think you covered all the main stuff. You have to disclose a lot more public documentation. You need to be much clearer about conflicts of interest. You can't pay members of the board just for being board members. There's a wide variety of general limitations and general higher accountability practices for nonprofits than there are for, you know, a private LLC. So I'm not saying, I'm not recommending at all that the LLC needs to necessarily report in the same way a nonprofit would. the Zcash community may feel that it doesn't care about some things, or perhaps it might say that in certain areas it wants more accountability about budgets from both the Zcash Foundation and the ECC than an annual report that's published and filed with the IRS. So I think there's a lot of room for negotiation there, but in general, nonprofits are held to a higher standard in terms of reporting. They need to make more information transparent, and there are certain actions they cannot do that a private limited liability company can do in the United States. And I'm answering another question on YouTube, so I need to hand this off to someone else while I type it up.
Could we talk about I'd love to talk about what the priorities are, like the kind of ambitious goals that maybe even like starting at the upper echelon of if we have the kind of maximum projected reasonable probability amount. I think one of the coolest technical proposals is basically scalability improvement. I think we had broached the topic of proof of stake development somewhere in here, and we brought up the discussion about how interacting with regulators and doing business development, talking with exchanges is part of what's been done so far. And those are along the lines of what the plans in the future are to do too. Is there a clear set of priorities that we think people kind of already agree on, like most important, least important? Maybe it's even too open-ended of a question to answer, or yeah. Call on Dara.
Go on. It's not too open-ended. I can tell you what I'm enthusiastic in working on. I think so. Cryptocurrencies in general haven't scaled so far. There's kind of a constant limit on how many transactions you can do, and it's not that we're actually hitting those limits in the case of Zcash. It's that a limit like that is also a limit on the imagination of what the cryptocurrency can do. And to remove that limit on imagination, you need to make it clear that yes, this is going to scale to large numbers of users as a medium of exchange as well as a store of value. And it's going to be practical, and it's going to be usable, and it's actually going to compete with things like credit cards and cash. So I am very worried that there's kind of an attack on privacy by, in a lot of cases, removing cash as an option. And that is resulting in a huge amount of metadata that is accessible to people who shouldn't have it. And to counter that, we need something like Zcash being used on large scale. And to do that, we need to solve some really difficult cryptographic problems and engineering and distributed protocol design problems. And we need to have the best people working on that in a sustained way for 2 years at least. And in order to fund that, we need enough money to pay them. And it's as simple as that. Okay, that's my pitch.
Thank you. Strad, what would you like to say?
Yeah, yeah, I agree with what Dara just said. There are a bunch of different projects going on, like in the cybercoin industry, as well as sort of more generally in terms of addressing scalability, addressing usability, a bunch of different directions that people are going. But just to take one example there, I think Coda is an interesting one at the moment, which is looking at using similar technology to what we use, solely for scalability. But they're not focusing on privacy. Similarly, you have things like Lightning Network looking at using things more broadly, but for layer 2 protocols. But they're not directly focusing on privacy. Something that I think the Zcash network is, and thus far has been incentivized for, is figuring out how to either take existing technologies or invent new ones, because we've had to do a fair bit of that thus far, and figure out how to do these things in a privacy-first way. So, with the asterisks in mind that what actually is physically deployed on the network right now in terms of how people have been using it has not been majority private because of primarily technical limitations of the original stuff being very, very, very slow, and also like eats RAM like there's no tomorrow. But we've solved that problem, and then one of the things that I'm personally interested in, so aside from the scalability thing, is in terms of the adoption side, actually making the core stuff that we now have as a base. So putting aside any potential large improvements, making the core stuff that we have usable as a base usable more widely. So even not even before we get to the 10 billion users, getting to the 10 million or 10,000 users level. And that requires figuring out how to disseminate the what is currently very technical and high expertise level required knowledge to be able to interact with Zik and Zcash in a safe manner. Because it's very easy to take Zcash and go, oh, I'm going to bundle it into my existing custom stack. And if it is done so trivially, you can end up with shooting yourself in the foot from a privacy perspective. Likewise with basically any privacy technology. So to me, there's a dearth of usable libraries in a bunch of languages, usable documentation for developers and things, which to me is a necessary thing that I want to see happen over the next couple of years to make this usable by everyone. Now, that as a priority is great. But of course, it then pushes out how long it would take other things. For example, Dara's quote of a couple of years for scalability would be if that's the only thing we worked on. And every additional thing that we want to parallelize and work on eats up resources and time. So we haven't even begun to talk about future work on ecosystem integration beyond this. We haven't talked about marketing. We haven't talked about even just maintaining Zcash-D, that costs time and resources as well.
Or other things like programmability, which to an extent follows on from scalability, because there's no point in having programmability if it's not going to scale to the levels at which you can use the programs.
Yeah, there are indeed a lot of things that the Electric Coin Company and the Zcash Foundation have outlined as goals that they would like to work on, over the next few years. I'm interrupting just to prevent us from going down quite that rabbit hole, just because we're focused mostly on the funding of these goals. And of course, it is important to know what these goals are underneath, so that the community is funding something that they find is really important. But I want to make sure that we're focused just on the funding aspect of these now. If we're talking about funding proposals, like for example, scalability that will take years, we want to make sure that the funding, the foundation, the Electric Coin Company, all these entities that are supporting the Zcash ecosystem can continue to support the infrastructure in a sustainable way. That's the main topic here. So on that note,
Justin, could I ask a question then? So I mean,
absolutely.
One thing I wonder about is do you think the community wants to be involved in setting that strategy or approving that strategy? Or basically, so far, Zuko leading ECC has been able to just make the decisions on strategy. We're going to prioritize this and cut these features, and sometimes they're difficult or unpopular decisions. And so one thing I wonder about is just that. What is it the community would want to see a menu of options to choose from and what they all cost, and then sort of pick among them like that, or generally buy into a roadmap wholesale? Not quite a focused question, but maybe something to react.
I think that's a really good question, and I think to a large extent it depends. I think the past several years, the Zcash community has looked to the Electric Coin Company and the Zcash Foundation to select its initiatives, and I don't think it needs to get to the point where necessarily it goes on a vote line by line, feature by feature basis, of course. But I think that it is important, nevertheless, that these entities support projects that people are generally in support of. And it's usually going to be a sort of delegation process saying, we feel comfortable with your management, we feel comfortable with your team, we feel comfortable that they can execute. So the more comfort that I believe the community has, the more flexibility that they will provide generally. In some funding systems like Monero's, there is no entity that really has that type of accountability. So as a result, they go more line by line. And perhaps some people feel that it's appropriate to go a little bit in that direction. From my perspective, I look at this $1.1 million a month number, and I don't need to know where every dollar goes. But I want to know, okay, well, what type of features might be postponed if we drop it to 750? Is it something that is potentially feasible? What does that look like? So it doesn't necessarily, in my opinion, need to be a line-by-line item, but I think it is generally appropriate to have a conversation about what sort of support can be provided for the amount of resources that the community is willing to provide. I think is sort of the better general question there. I know Dara wanted to respond to that.
So yeah, it comes back to my point about having a critical mass of engineers and giving them the freedom to make technical choices according to that expertise. Because there are lots of relationships between features. There are synergies between features. There are features that you can't do together. There's a very complex security analysis that goes into deciding what we put into network upgrades. It requires experts, and I'm actually very skeptical about. I mean, the idea of approving things line by line was a straw man, but I'm even skeptical about something coarser grained than that, because I think that, to put it bluntly, we're the experts, we've been doing pretty well. Trust us to know the cryptography.
I mean, so I'm going to push back a little bit, and I don't mean to be mean in this regard, but for example, when Zcash did the transition from Sprout to Sapling, one thing that I took very, very poorly to generally was the team's approach with how to handle the migration process. I
don't disagree. That was mishandled.
I felt very strongly that it was handled completely inadequately, and I continue to feel that way. And I felt in the moment that I didn't have a mechanism to properly express that. And so while I understand that to some extent you need to put some framework about conversations, it's something that I try to do within the Monero community. It's something I'm pushing to help us do more of in the Monero community. I nevertheless feel that that type of accountability is very, very important so that you can solicit feedback and actually figure out what features are useful to people and how they use the software, or else you're developing software that no one will use. So as a type of project manager role, I absolutely understand that I'm not going to be touching your cryptography, right? That's something I'm not coming anywhere near, right? Don't worry about that. But in terms of figuring out what features the Zcash Foundation and the Electric Coin Company are receiving resources to develop, there needs to be a tie that the community will receive some use out of those.
So I don't want to go down a rat hole here, but the migration tool is a very good example, because there was no controversy about the fact that we needed this tool. That this was an issue of resourcing and prioritization, and on which there was some disagreement within the company, I think. And yes, this is the kind of thing where it would be useful to give external the community a greater role in sort of shaping that prioritization. And I have no objection whatsoever to that.
So we have been talking for a long time. We can continue to, but I'm going to focus the conversation a little bit more on back on the high level, ultimate main point of the conversation, which is to make an initial conversation, an initial discussion for us to discuss what's happening with the future of Zcash Block Award, because there's many different opinions. I've been reading the YouTube chat, and many people have strong opinions for or against some combination of some optional or mandatory fund, and it's going to be a large process that's negotiated over a long time. So the point of this conversation was not to solve that problem, it was to start it somewhere. And in the context of starting the conversation, is there anything else that you really feel is important to leave a Zcash viewer who's made it through, over 2 hours of content so far? They're really committed individuals. Something that you would like to let them know before we finalize this initial conversation. And Andrew has volunteered to speak, so go ahead, Andrew.
So we've covered 3 of the 4 things that I wanted to talk about. The last one we haven't gotten to yet, and that's too bad. I think the placeholder person had left, but I'd like, if you're interested, to chat a bit about like what you think would make a difficult decision legitimate in terms of representing the community, being decentralized. This, live chat is, I think, a pretty cool step, but only one thing. I know we've kind of discussed a whole bunch of things ranging from the community governance panel to minor voting to coin holder voting, a whole bunch of those. I wonder if, you, Justin, have comments on this, or yeah, again, an unfocused question, but that'd be a topic I'd like to talk about.
Yeah, I'm not going to answer that specifically, but I will say that the topic of determining community consensus is an unsolved, difficult problem. And it's something that within the Monero community I struggle with all the time. And I'm sure that we'll need to have an ongoing set of discussions within the Zcash community. I don't have much else to say on top of that for this call. That you could fill an entire term of just arguments for that.
I'm glad summoning ML back worked. Did you hear the question and want to respond to it, or was that just a coincidence?
I missed that. I'm sorry. What was?
ML, you had just joined. I had asked if anyone wanted to offer thoughts on what makes a difficult decision legitimate, and like what things we could do better, or should make a point of in terms of like engaging what is the community's will or input on this. ML, I don't know. You're muted right now. I don't know if you're listening. It seemed like I had just summoned you and you popped up right after I mentioned your name. So thought you might have been listening and responded, but okay. Won't dwell forever on this otherwise.
If they're interested. Thank you, though, for expressing the importance of figuring out how to make this decision. And ultimately, it's not going to be something that everyone agrees with. So the Zcash community will have to be prepared for that. But it nevertheless should be thought about long and hard. Does anyone else have any final remarks that they would like to leave for this initial conversation? And will inevitably need to be others where specific proposals are actually checked and numbers are chosen, and people generally, hopefully feel relatively comfortable with the result and how we got there. Okay, Dara.
Wait, I see Sonia trying to talk but muted.
Sonia first.
You're still muted.
Still muted.
I'm sorry. Apparently a new video chat application is like more than I'm technically able to handle. Sorry. Well, I guess, Dara, now that I've interrupted you a couple of times, I'll just go ahead for the sake of efficiency. I just want to, like, I know there are people watching this who aren't talking on video, so it's mainly addressed to them, but you can step up and get involved in evaluating proposals, suggesting amendments to proposals, helping to review Zcash improvement proposals in the zips repo once it gets to that point. And I'm glad that people are expressing their opinions, but there's a kind of skin in the game thing here, where if the amount of effort that someone is willing to expend is the amount of effort it takes to type a 30-second comment, that's one thing. And if someone is willing to spend like 30 minutes commenting on a zip, I personally am going to care a lot more about the opinion of the person who put in more effort. And I know that this somewhat feels unfair, because people are like, you know, we have full-time jobs, and like, you know, you're supposed to work this out. You're supposed to take our feedback into account. And we're going to take everyone's feedback into account, including the throwaway comments. But I think a very important signal, at least for my personal evaluation of, you know, community members' various viewpoints, which again, there are various viewpoints, you know, showing up and doing a little bit of work is a way to give yourself a lot more credibility. And I've seen a lot of, especially among community members who are vehemently against the Founders Reward, there's a lot of saying, or sorry, not the Founders Reward, the possibility of a new dev fund. There's a lot of saying that they're against it, and then not a lot of actually doing anything. I don't know, maybe this is unfair of me. Maybe I'm expecting too much. And also, I mean, it is just kind of normal there's the internet, like 90% of people are just lurkers, 9% comment, 1% do like way more. So there is a kind of rule of thumb where you would expect this kind of response. But I don't know. I really want to request community members who care what happens to, like, if you're not already on the forum, make a forum account. That's where a lot of this discussion is happening. And really weigh in on specific proposals or advocate for a specific proposal. That's really a more concrete way for you to influence, you know, whatever outcome we end up with. Like, there's no guarantee if you get involved that you're going to get exactly what you want. But I think not getting involved makes it less likely to get what you want. I don't know. I'm sure I'm about to get torn up in the YouTube comments for saying this. So I don't know. Anyone disagree with what I'm saying?
No, it's great. I just want to add that, like, we read everything that, you know, gets posted. I mean, maybe things will change in a different world where there's so much noise that it's not possible to keep up. But, you know, at the moment, it's, I think, quite a high leverage thing to spend a bit of time writing a comment on what you think are contributing. We see everything that gets posted to the forums and are able to include it in what we talk about and think about.
Okay, Dara, you had your hand up first. You are still muted, though.
To be fair, there is a status quo proposal that says don't have any dev fund, and if people want to support that, then they can. That's a more productive thing to do than shouting on Twitter. So the other thing that I wanted to say was to thank Justin for a really useful and thoroughly worked out model. It's more detailed and more realistic than I was expecting. So thank you very much for that.
Thanks, I appreciate it. All right, Strad.
Yeah, this was really cool. Thanks for organizing.
Yeah, I'll third. I was going to second, but Andrew jumped in, so I'll third that. That thank you. I'd quite like. It feels like the sort of thing that. It would take a bit more time, probably offline, to really dig in and see how things move. But so hopefully we can maybe figure out how to make something like that more.
Yeah. I mean, the test of a good model is that it tells you something that is true and you didn't know before. And I think this model does that.
Yeah. So I guess the thing I'd like to the thought I'd like to leave people with is, like, you know, what we're trying to do here is figure out either directly or indirectly, what it is that the community values depreciating their personal holdings on, in a sense. The people who have Zcash and hold it are paying. At the moment, they pay for network security with 80% of the block reward, and they pay that to miners, and they pay.
I'd like to push back a little bit on the idea that miners are paying for network security. But first of all,
I wasn't saying miners pay for network security. I was saying that the entire ecosystem as a whole does via the fact that block issuance to a miner depreciates. It causes inflation, therefore depreciates.
Yeah, I misstated. You were saying that
anyway,
we as a community pay for network security by giving the money to miners. That's not quite true. First of all, we don't entirely get network security. I mean, if you look at the cost of attacking the proof of work chain, it's not actually that much, and it's not high enough. So we may have to do something else. Okay, I will avoid going down that rat hole.
But this is why I love working with you, Dara. I really like the precision and technical analysis you bring to things. But yeah, just we're trying to figure out what the relative benefits are of putting effort into developing the core node versus developing large extensions to it versus working with the ecosystem versus running, keeping the security of the network secure, and like all of these are important things. And I would like people to be approaching these proposals thinking about what would benefit them personally as someone who is participating with and hopefully benefiting from being in the Zcash community. I also like to think of the benefits to the wider academic ecosystem and technology as a whole, but that's just me.
Me too.
Yep. Thanks, Strad. All right, Josh, your turn.
So I just wanted to also echo two points. One is that people really do have more of a voice in this than I think they themselves know, minus the trolls who I personally ignore. But people who have like legitimate criticisms and comments and interest in furthering this discussion really do carry a lot of weight to me, and I think to everyone at the foundation. So I certainly just want to echo what Sonia said, which is like this is a really important discussion to be having, and people should feel like they have the agency to influence this debate and discussion, because they do. Then the other piece, which is really more reiterating what Andrew said earlier, is that what we're doing right now is we're trying to collectively make a very difficult decision, and not just the decision itself, but the way that we make it will set precedent for the project. I think for many years to come, and so I think it's important to think about the way that we're all collectively making this decision and how we approach it, with the understanding that it could wind up setting up how these kinds of decisions are made in the future, or it might inform how we don't make this decision in the future. I'm not sure, but I just hope that people keep that in mind when thinking through and having their voice be heard in all of this. Yeah, but again, also thank you so much for putting this together, Justin, because this is fantastic, as was the model. But really, even this discussion was great. So thank you.
Yeah, all of you spent at least 3 hours here too, so you all committed a lot also. Okay, let's see. Josh, John, do you have anything? ML, Iran, do you have any final comments before we wrap this discussion?
So yes, I would like to say first, thank you for preparing the models and for moderating this discussion. And also I'd like to take a step back and restate what is obvious to all of us. We're here to do something important. We are here to enable financial privacy using state-of-the-art technology, and we are in it for the long game. When the history books get written about how Monero and Zcash and all of the people on this chat build this technology and what it enabled, I want to make sure that they note this as one of the interesting governance experiments that has succeeded and has let us change the world. Let's work together to make that happen.
Excellent, thank you. Sonia, do you have anything else you would like to wrap us up with?
Sorry, muted. No, I'm good. I guess I do want to poll the people here and hopefully also the people in the YouTube chat. Should we do another discussion like this in another week or another couple of weeks? If so, I can host it, or maybe after zips go in, possibly that would be a good time. I don't know. What do people
I need
think?
something after DEF CON, at least. Like, there's no way I can think about any. I'm surprised I squeezed this in, but DEF CON.
Yeah, I'm kind of amazed, actually. For people who don't know, Justin is one of the Monero Village organizers, so he's been running around with spreadsheets and trying to get everyone to send in their headshots, I imagine, that kind of thing.
Oh, and thanks to the Monero community for keeping us on our toes. We don't say that enough, but it's actually really valuable.
Okay.
I agree with that. Yeah.
With that being said, I'd like to finally wrap up this discussion. I'm glad we're able to start it off somewhere. I know there will be plenty of other times for us to talk about things. To those who are watching now and have made it through this whole thing and would like to continue to get more involved, the Zcash Community Forum is the best place for you to voice your opinion. There are 10 formal proposals that have been made with varying levels of support and varying levels of interest and comments. So absolutely go there and leave your opinion, because there's a wide variety of how things will go here. And I appreciate that in general, the Electric Coin Company has released many recent posts that have helped give a little bit better perspective into their opinion, give light to their perspective better. And I hope that we can continue having a good, productive conversation going forward. And I look forward to the next call that you moderate, Sonia, and appreciate the Zcash Foundation's involvement in this process. All
Wait,
right.
hold on. Don't close the chat yet. Okay, now go ahead.
Needing to leave some last comments. All right.
Exactly.
I'm going to wrap this up then. So thank you everyone for joining me for the last 3 hours. It's been a lot, but it's been important, and I've enjoyed it. And we'll catch you all in the next one if there is one. So take care.
See you later.